Hello and welcome to today's webinar. My name is John Finch. I am the director of ABLE United, and just wanted to thank you all for taking some time today to join today's meeting. My webcam is in service. Don't worry, I won't be using it too much, but I just want to first of all thank you all for taking time today. We have a very special topic today. Today we're talking about how the Social Security Administration views ABLE accounts. And as I said, my name is John Finch. I'm the director of the Florida ABLE program, ABLE United. And I thought, who else better to talk about Social Security Administration than a representative from Social Security? So with us today is Tina. Thank you, Tina, for joining.
Thank you for having me. It's really a pleasure.
Wonderful, wonderful. So let's kind of take just some housekeeping tips here. So if you've joined today's webinar and you're in on audio, you are in listen mode only. So what that means is I cannot hear you speak. So if you do have questions throughout this presentation, in the GoToWebinar control panel, hopefully that you see, there is a Ask Questions box. And there you'll be able to submit your questions and we'll answer them throughout. And hopefully we'll also have some time at the end of our presentation to go over any unanswered questions or some common questions that you might have. And so please note that. Also, you'll notice that there is a handout. Our program description and participation agreement is available for you to download. That gives you all the more detailed and nitty-gritty of how the ABLE program here in the state of Florida works. So with that being said, let's kind of go over agenda for today. Is first of all, we'll talk about the ABLE program, specifically the ABLE Act. Then we'll dig into ABLE eligibility. What does it mean to be eligible for an ABLE and who is eligible? We'll look at the specifics for the Florida ABLE program, better known as ABLE United. We'll turn it over there from there we'll turn it over to Tina, and she'll walk us through how the Social Security, the different programs, what's new with Social Security Administration, and then really do a deep dive into how Social Security views ABLE accounts. And then we'll, hopefully if we have time, we'll do some Q&A sessions. But also to make this a little more interactive, I wanted to go ahead and do some poll questions, and this will also allow some late attendees to join us as well. So I'm going to launch this first one, is just basically, are you familiar with the following programs? Check all that apply: Supplemental Security Income, Medicaid, Medicaid I-budget waiver, ABLE United or ABLE accounts, or maybe none of the above. So if you just take a moment here, we'll kind of see where everybody is at. And it's a great way for you to participate in today's webinar. Wonderful. We'll give about 10 more seconds. And this is really beneficial for helping us as we do future webinars or presentations to get an idea of how familiar individuals are to make sure we're providing the right information to people. So go ahead and close that. Thank you so much for taking the time to do that. I'll go ahead and share the results real quickly so you can see a lot of you are familiar with SSI or Medicaid. Or an ABLE account. So that's great news. So that's I know that will help Tina as she presents on her portion about ABLE accounts. So let's get started with the ABLE Act. What is the ABLE Act? It really started over a decade ago when families with children with disabilities sat around a dining room table to say, how can we do a better job in ensuring that we can help our child in the future without necessarily impacting their benefits. And so on the screen here is Jen and her son, Sean. They were at that dining room table some 10, 12 years ago. And finally, through their hard work and advocacy, the Achieving a Better Life Experience Act passed. So what is the ABLE Act? It is basically a new law that allowed states to create tax advantage savings and investment accounts specifically designed for people with disabilities. These accounts are used to encourage and help individuals and families to save after-tax dollars to support health, independence, and quality of life. What it did was added a new section to the Internal Revenue Code, Section 529A. This is similar to the previous section 529 that's on qualified tuition programs. So if you heard of Florida prepaid or Florida 529 college savings account, those reside in the 529 chapter, and so there's a lot of similarities between the 529 ABLE Act and that section. Here in Florida, each state kind of had to set up their own program, and we passed legislation in July 2015 to create a not-for-profit and direct support organization of the Florida Prepaid College Board to run Florida's ABLE program, better known as ABLE United, and we launched July 1 of 2016. So we're coming up on our fourth year of being around. So why have an ABLE account? What is the purpose of an ABLE account? And it is a tax advantage savings account, but the goal is to save for future qualified disability expenses. And this can include, as you see in some of these categorical buckets, housing, education, legal fees, any kind of assistance, or anything that's going to help an individual improve their health, independence, or quality of life. And they don't have to be medically necessary, or you don't have to get pre-authorization, and we'll talk about how you can better use this. The only example that the Treasury did give us is, let's say you had an individual who is autistic and needed assistance with communicating in the neighborhood or in their community. A cell phone and a cell phone plan would be a qualified disability expense because it would help them become a little more independent and better improve their life in the community. So who can open an ABLE account? Not everybody can open an ABLE account. There's a specific rules. For here in Florida, we are Florida's program, so we do limit our program to Florida residents at time of application. Individuals can only have one ABLE account nationwide, so that's important to know. And the two other requirements are true for all ABLE programs, whatever state might be running that program. One is that the onset of the disability had to occur prior to age 26. Basically, they needed a diagnosis prior to that age, and the disability has to be severe. So what does that mean? If the individual is receiving supplemental security income or Social Security disability insurance based on either their work history or a parent's work history, then they would automatically qualify. If they're not receiving any of those benefits, then they have to have what they call a physical or mental impairment that's supposed to last either for 1 year or their lifetime. And it's going to have marked and severe functional limitations. So it's going to require some kind of diagnosis that's going to say it's going to impede your daily life. You're going to need extra therapies or additional medical expenses to just live a typical life. And so that's important to know. So if you have a young child, maybe they have a diagnosis, but they're not receiving those benefits, that is a way to self-certify, stating that you have you meet that requirement. Next on, we'll talk about who owns the ABLE account. The individual with the disability, also known as the beneficiary, is the owner of their ABLE account. Now, we know not in every situation someone can open and run their account. So somebody that is a parent, a legal guardian, or somebody that has a power of attorney may open and maintain the account on your behalf. If you're opening this account on behalf of an adult beneficiary, we're going to require that you submit that documentation to us just to prove that you have authority to manage somebody that's an adult's account. And we also provide additional forms on our website, ableunited.com, that can assist you with either a durable power of attorney or any other kind of account documents or forms that you may need to assist you. Now, I'm going to touch on government benefits because that's one of the key advantages is being able to save in the ABLE account and not impact your government benefits. But we'll really let Tina kind of dig into how supplemental security income works with that. So basically, ABLE allows individuals to save more than $2,000 and it not count as a resource or count as cash towards any means-tested government benefit program. The two biggest ones being supplemental security income, which we'll do a deeper dive here shortly, and also Medicaid does not count money in an ABLE account as a resource. So what if an individual is receiving Medicaid? Once again, we have this tag, Save for the Future Without Losing Medicaid. So money in the ABLE account doesn't count as a resource for Medicaid. Now, Medicaid, just as we'll make sure we're all on the same level here, Medicaid is a federal and state partnership program that helps pay for medical costs for individuals with limited income and resources. This could be individuals with disabilities, elderly, pregnant mothers, etc. Also, something that might be more familiar with is the Medicaid I-budget waiver. This is a home and community-based waiver that is used to help support individuals to live and maintain in their community in a home-like setting. They utilize an individual budgeting approach to make sure that their needs are met. So how does this relate to ABLE accounts? Funds in the ABLE account are disregarded when determining eligibility for Medicaid. And that even includes funds that are in the account or withdrawn from the account as long as they're used for qualified disability expenses. Now, just an important note to make, if an individual who was receiving Medicaid passes away, funds left over in the ABLE account could be used to pay any outstanding qualified disability expenses, including funeral and burial expenses. Then those leftover funds would transfer over to that beneficiary's estate. And the estate may file a state Medicaid recovery on that. However, they cannot file a Medicaid recovery claim on an ABLE account specifically. So that's just important to know when you're thinking of now having an asset in a beneficiary's name and how that could, how they need a plan for their future as well and what happens when they pass away. So how does it work? It's all online, ableunited.com. You'll go on, you'll enter some identifying information about the beneficiary. If you're doing this on behalf of somebody, we're also going to request some of your identification. If you're doing it on behalf of an adult, we're going to require that you have that authority, that proof of authority, whether it be a power of attorney or legal guardianship submitted to us. Once you're in, you'll be able to link a bank account and contribute a minimum of $25 and select your various investment options. Once again, contributions are considered completed gifts. They can come from the beneficiary, the account administrator, a third party. Anybody can contribute these accounts up to a total of $15,000 per calendar year from all sources. Also, the money can be rolled over from an ABLE account to this ABLE program is also allowable, or 529 college savings plans can roll over leftover funds into an ABLE account. Just important to know about contributions, earned income still counts for earned income purposes, for IRS purposes as well as for Social Security purposes. So if a beneficiary is working and they put their entire income into the ABLE account, it still counts as earned income for that purpose. So money's in it. When you put money and you contribute money to the account, you get to select how you want this money to be either saved or invested. And you do that at the time of your contribution. And we have 3 pre-designed portfolios, investment portfolios that meet the needs of most investors, a conservative, moderate, and growth. Or individuals can kind of create their own portfolio or create a savings account with the funds in the account. And you can see on the screen we have a variety of options. We have a conservative, moderate, and growth, those portfolios. Or we have individual funds, an FDIC savings, a money market account. And then also just want to point out that you can view performance of any of this information as well as some additional details on the various Vanguard and BlackRock options on our website. And there's a link here just so if you want to check out current or historical performance, that's available on our website as well. Now the money's in it, you want to be able to take it out. The great thing is there is no pre-approval process. You're in control of the money. And so you can choose to take money out of the investment or savings or whatever option you would like to and put it back into that connected bank account. You can request a check to be sent to you or the account administrator. Or our newest feature is an ABLE Visa prepaid card that you can load on your account and use anywhere Visa prepaid debit card or Visa debit cards are accepted. So just a great way to provide additional flexibility and access to your money. Once again, we recommend keeping receipts anytime you make a withdrawal for the IRS or for the Social Security Administration. If you're on SSI, they may request that information. And also notes on why it's a qualified disability expense. Maybe it's transportation related, but just make sure you keep that documentation for your records. Finally, we'll kind of end here and then turn it over to Tina, is how much does it cost? We are Florida's program. We try to make this the best value for Florida residents. So we do not have an application fee. There's no monthly account maintenance fee. You do have to contribute the minimum of $25 to your account, but that is your money. If you want paper statements, there's an annual fee for that of $10. And then also that optional ABLE Visa prepaid card we mentioned does have a $2.50 per month fee to it. Our investment options outside of our FDIC option do have a minimal annualized fee that's taken out of performance. So you don't really see this fee, but it exists there. And so when you look at your performance, knowing that this small fee was taking out of that return. Also, before I turn it to you, I thought this would really, I would definitely have to mention this to you. So our No Limits campaign that's currently running through the month of February, we really wanted to highlight and celebrate individuals that we serve and how they're pushing the boundaries, not only by being able to save and invest, but in their lives and in their communities. And to celebrate this, we want to offer any new accounts open in the February who complete enrollment, who contribute that minimum $25, that will provide an additional $50 contribution on us to your account. And we have this tagline through this month: together we have no limits. And so just wanted to make that available for you. Also, if you have questions specific to ABLE United or the ABLE program, feel free to visit our website, but we also have customer service available Monday through Friday, 9 to 6 Eastern time. And also our website has live chat. So maybe you don't like being on the phone for long periods of time, a great way to chat with somebody to have any questions you might have answered. So that is that. So I'm going to now turn this over to Tina. But before I do that, Tina, I wanted to say I think there's a handful of questions that we might have from individuals. And let me see if I can go through some of this real quick. Okay, what happens if somebody moves out of the state of Florida? Good question. You could take the ABLE United account with you. It's all online. You just have to be a Florida resident at the time of application. However, we always recommend people to check out that state's ABLE program, as there might be state tax benefits for that specific program. So always check what that state may have to offer. And then I'm going to leave it as that, and then we're going to go ahead and turn this over to you, Tina, to walk us through Social Security.
Thank you, John. Thank you again for inviting me today to speak and for making Social Security a part of today's event. Again, my name is Tina Williams. I am a public affairs specialist with Social Security. I've been with this agency for approximately 13 years. I've conducted and taken claims for individuals during that time. For today, I'm going to be speaking about Social Security Disability, SSI, and how the ABLE account works with SSI. For more than 80 years, Social Security has helped secure today and tomorrow by providing individuals benefits, financial protection for millions of people throughout their life's journey. Social Security touches the lives of every American, both directly and indirectly. And as you consider the information that you're about to receive, I encourage you to think about all the ways Social Security has been linked to your life and the lives of your loved ones. So what's new in 2020? The amount of earnings, there are several important adjustments to the work incentive programs that went into effect January 1st of 2020. The substantial gainful activity amounts for individuals with disability other than blind increased from 1,220 to 1,260. The SG amounts for individuals that are blind increased from 2,040 to $2,110. The monthly earnings limit that that we use to determine for trial work months and went from, I think it was like 800, it went to 910 this year. And the federal benefit rate for SSI is now 783, whereas last year it was 771. The amount of earnings that will have no effect on eligibility for benefits, or benefits for SSI beneficiaries who are students under the age of 22 is $7,670 per year. The amount of earnings that we can exclude each month, again, just for those students who are under the age of 22, we have excluded the maximum amount for this year is $1,900 per month. Medicare, if you are on Social Security disability and you are receiving Medicare, Medicare Part A is normally free for those individuals who've worked and paid into Social Security. But if you don't have enough quarters, and we'll go into that a little bit later, the credits, my apologies, that Part A, which is your hospital insurance, is $458, while Medicare Part B, which is your supplemental medical insurance, is $144.60, and some individuals with higher incomes pay a little bit more. John, are you still there?
Yes.
I lost you guys.
Can you hear me?
I can hear you, John, but I lost the webinar.
Okay. So I'm on slide 5, talking about what Social Security with disability means.
Okay. All right. Disability can happen at any moment in our lives. Social Security disability benefits provide financial support to people when they need it most. For people who can no longer work due to a disability, our disability program is there to replace some of their lost income. Disability benefits provide modest coverage for severely disabled workers and their dependents, including wounded warriors. The Social Security Act defines disability as a person who cannot work due to a severe medical condition that has lasted or is expected to last at least 1 year or result in the death, or the person's medical condition must prevent him or her from doing substantial gainful employment. Now, just briefly on a couple slides prior, I was speaking about SGA. So when a person is filing for disability and they're engaging in SGA, they're earning over that amount of $1,260. Normally, that's too high for an individual to file for disability. What we can, though, look at is if a person has a special work condition, not work condition, a special, oh Lord, I'm sorry, I have to come back to that one. But we can reduce those gross wages to put that person below substantial gainful work activity and proceed with filing a claim. So there's 2 programs that we're looking at SSDI and we're looking at SSI. So what is SSDI? Social Security disability definition is based on your medical condition and the fact that you are not expected to be able to do any work for at least 12 months or your condition is terminal. This work determination is based on your age, your education, and your work experience. The actual disability definition makes a clear distinction between Social Security's disability requirements compared to other disability programs such as the VA, veterans, and workers' compensation. So what are the requirements for getting disability? To be eligible for disability benefits, you must meet 2 different earnings tests, a recent work and a duration of work test. The number of work credits you need to qualify for disability benefits depends on your age when you became disabled, and then generally you need 40 credits, 20 of which were earned in the last 10 years, and ending with the year you became disabled. This table shows an example of how much work you need to meet the duration of work test if you became disabled at various selected ages. For the duration of work test, your work doesn't have to fall within a certain period of time. So for example, let's just say at age 20, then you would generate 28, my apologies, then generally you would need about 1.5 years of work so that we can actually look at your recent work and your duration of work test. SSDI benefits for the family. If you If we determine that you are disabled for your SSDI and you have a spouse that is at least age 62, a child that is under the age of 16, my apologies, um, your spouse, if she or he is age 62 or older, your spouse at any age, if he or she is caring for a child of yours who is younger than the age of 16, which means as your spouse can receive benefits, and if he or she is taking care of a child under the age of 16, can also receive benefits for that child. And then a child that is unmarried, including an adopted child, or in some cases a stepchild or grandchild, can receive benefits off of your record, and it doesn't affect your benefits at all. And then a child under the age of 18 can also receive benefits. And a child that is also disabled prior to the age of 22. So for eligibility for the ABLE account, they're looking at disability prior to the age of 26. For Social Security, the disability for SSDI, that has to have occurred prior to the age of 22. SSDI versus SSI. When an individual files an application for disability benefits with Social Security, we always check on eligibility for both programs, SSDI versus SSI. The same medical requirements apply to both programs, but the non-medical requirements are different. Our local Social Security field offices will review your non-medical eligibility. If you meet the non-medical requirements for SSDI, SSI, or both programs, we send your claim or claims to a state examiner in your state. So, example, if you filed here in Florida, we would send it to the state of Florida examiners here. The medical examiners work for the state agency called the Disability Determination Service, or DDS. Once a medical examiner makes a medical decision on your application, you will receive notification by mail, and your local Social Security office receive notification electronically. So if you're approved, you'll most likely receive that letter before we do, and then we'll find out later, like, yeah, you got approved, because sometimes the mail will go out before we even get that notice, like, hey, you were approved. If you are approved, you'll start receiving your benefits for disability. Now, disability for SSDI, there is a 5-month waiting period. So, for example, if you were deemed disabled July 1st, you still have to serve a 5-month waiting period. So July, August, September, October, and November, that's 5 months where Social Security does not pay any benefits from that particular program. On that 6th month, let's just say, so it's July, August, September, October, November. In December, you're eligible for your first benefit. The benefit for December comes in January. You guys get paid a month in arrears. Now, SSI is a little bit different, and we'll touch that in just a second. SSI. So SSI stands for Supplemental Security Income. Social Security administers the SSI program, which pays monthly benefits to adults with limited income and resources who are disabled, blind, or age 65 or older. Blind or disabled children may also get SSI. People who have worked long enough generally receive SSDI, but may be able to receive SSI benefits such as disability or retirement. And SSI benefits at the same time if the amount of Social Security benefits in combination with a person's other income falls below the SSI income limits. Excuse me. Requirements for getting SSI. To be eligible for SSI, you must have limited income and resources. Be age 65 or older, be totally or partially blind, have a medical condition that keeps you from working, and is expected to last for at least 1 year or result in your passing. Of course, there are different rules for children. This is what we're talking about, is we're looking at the non-medical. This information here is the non-medical side, and we then go into the medical side. So when an individual is filing for SSI benefits, SSI, we look at any income. So income could be your wages, Social Security benefits, pensions, unearned income, which could be veterans benefits, unemployment benefits. We look at resources such as any real estate, bank accounts, stocks and bonds, cash. We also look at where you live. So you must live in the United States or Northern Mariana Islands. If you are not a U.S. citizen, but you are lawfully residing in the United States, you may still be able to get SSI. I look at resources. The living arrangements can also affect the amount of money that SSI can pay out, because we're also looking at who's living in a household and if the individual is paying what we call their fair share. So it's really important that when a person is on SSI, that they report any changes to the local Social Security office to make certain that we're properly paying that individual their benefits. Of course, you want to report a change of address, change in living arrangements, change in earned and unearned income, changes in resources. We want to have that information reported to us within 10 days so that we can properly pay the individual the right amount, the right time. SSI for children. Children may be eligible for SSI as early as the date of birth until age 18. Of course, the child has to be under the age of 18 or is under age 22 and is a student regularly attending high school. For a child, requirements for a child to SSI requirements for children. My apologies. Child has a physical or mental impairment that results in a marked or severe limitation in functioning. Child must be either blind or disabled. If the child is blind, he or she must meet the same definition of blind as it applies for an adult. And again, that condition must be expected to last 12 months or result in their passing. Disabled children living in a household with limited income and resources may be eligible to receive SSI benefits. The eligibility, income, and assets of the disabled child and parents living in households are assessed, which means is if I have a child in my household, of course that child may or may not have any income. So income to the child could be child support. It could be benefits they may be receiving off a parent's record. It could be gifts that we're receiving. That's considered to be income, which could affect what they can receive from Social Security. The parent's income could also affect the benefits that the child could receive from that program as well. If the income, which we're speaking about is deeming, if that income is too high, so we haven't even looked at the medical side just yet, but if that income is too high, that child may not be able to may not be eligible for SSI benefits at that particular time because we're looking at the parent's income and we're also looking at the income of the child if that child is receiving, let's just say, for example, child support or any other type of source. So once the child turns age 18, we no longer look at that child's income and we just start doing a determination as an adult. And again, that whole adult process comes into play. So we make a new disability determination with the adult rules when that child turns age 18. We no longer count the income and resources of the parents. And if the child continues to live with a parent but does not pay for food and shelter, that child may not get that full 783 benefit rate and may it may be reduced to around $500 or so because that child is not paying his or her fair share into the household. So when should you apply? You should apply as soon as you become disabled. It takes to process the application from beginning to end, and for the state examiner's office to make a medical decision takes roughly 3 to 5 months. And we get a lot of the faces like, oh my gosh, it takes so long. It's because the state examiner's office they're trying to get those medical records, and when we're asking for the medical records from the doctor's offices, sometimes they're really slow to give it to us. So if you're able to bring that medical information in, you're more than welcome to do so, and we will forward that information to the state examiner's office. Or when you are contacted by the state examiner's office, you can send those medical records directly to them without that state examiner's office having to contact the doctor's office. And that can help with the whole shortening that 3 to 5 month period of waiting for them to make a medical decision. So how does this all play into the ABLE Act? Of course, the ABLE Act was signed into law in December of 2014. Social Security, for the Social Security, for the SSI program, ABLE account limits and qualifying expenses, ABLE account balances are excluded up to $100,000. So for SSI, if a person is on SSI, we exclude that. We have it in our system, and our database actually receives data from the state about the amounts of monies in the ABLE account. They will actually report to us the first of the month without a balance, and then at the end of that month, and if there's a discrepancy, it's actually up to the individual to report to us, hey, this is actually what I actually have in the account, or this is what I have less, and we go into how that money was spent out. Currently, there's 43 states, including Washington, D.C., who have established ABLE accounts. Beneficiaries can enroll in the ABLE program in their state or other states that accepts out-of-state residents. Contributions to the ABLE accounts. Contributions from the ABLE source to the ABLE account are not considered income to the SSI recipient. Of course, as John mentioned earlier, wages are counted, even if it is a payroll deduction. Exclusions of the ABLE accounts for most federal means tested programs, ABLE account balances are excluded. The limitation is the maximum amount that can be contributed to under a state plan. ABLE account balance are excluded up to $100,000. Anything over that can be counted as a resource. So the recipient is ineligible for SSI, and those benefits will be suspended, but they still remain eligible for Medicaid. So let's say, for example, John has in his account $102,000. And that let's go over the resource limit. So $103,000, $103,000, and that $3,000 makes him ineligible for SSI. So until he spends that down, he will not receive benefits from Social Security, but he still can receive his Medicaid. Now, distributions from ABLE account are not income to the designated beneficiary, regardless whether the distributions are of course, for QDEs, the Qualified Disability Expense, which are expenses related to blindness or disability of the designated beneficiary and for the benefit of the resident in general. Excuse me. QDEs for housing payments. For housing are payments for education, housing, transportation, employment training and support, and so forth.
Now I'm on the slide, and this is something, Tina, I think comes up quite a bit, is distributions from an ABLE account when it's paid for a housing-related expense. I think this is one of the number one questions I have, but I know attorneys like this as well as a way to help provide for housing without impacting benefits. So that's the slide I'm on now. I think it's slide 33, and it talks about
Thank you.
Yeah, distributions from an ABLE account that are housing related.
Okay, so we count a distribution for a housing related QDE or for an expense that is not a QDE as a resource. So if the beneficiary retains the distribution to the month following the month of receipt. So the QDE, so for example, and I had some examples back here. I'm sorry, John, let me just find that example. I had a really, really awesome one.
So I know on slide 34 it talks about the two types of housing-related expenses. One is if you're paying a health-related quality, but then also talks about the housing-related QDE at the end of the month.
All right, so Eric takes a distribution of $500 from his ABLE account in June of 16 to pay for health-related QDE. His bill is not due until September, so he deposits that distribution into his checking account. Distribution is not income in June. So Eric maintains his ABLE account at all relevant times, and the distribution is both unspent and identifiable until he pays his health-related expense in September. So we exclude that from John's countable resources in July, August, September. But it's up to the individual to report to Social Security of what he used that money for. And it could be just a receipt saying what he used that money for, a phone call. I would prefer a receipt. I'm more hands-on, and I like to scan it in. Sorry, you guys. 33.
That's a great example, Tino, talking about future related expenses, because this account is a savings or an investment account, and some people might say, well, I want to get out of my investments. I know I have upcoming expense. Maybe it's a conference you're going to, maybe it's a wheelchair modification, that it's important to know that they can take that money out now, and as long as they have that as identifiable expense in the future, and they have some kind of documentation, that Social Security is going to say, we're going to mark that on your account. We're going to exclude it as a resource from your bank account. So you're not, your bank account doesn't show that you're over that $2,000 limit, and it's excludable. Now, I know there's rules, though, that if they did use that money for something else, it could impact their SSI benefits for that month if they utilize it for something different.
That's correct.
Take us through the bottom example there on slide 34, the housing-related QDE about Amy using it to pay for housing-related expenses.
My apologies. She's pausing your checking account. Okay, so on the first of the month, okay, so depending upon the amount that Mary had in the month of June when she took out that fund, if it put her over that $2,000 resource limit, even though her rent was paid her rent was due on the 1st, her rent was due on the 3rd, she had to have spent that money before the 1st because it's counted as a resource on that June 1st. Does that make any sense right there?
Yeah. So basically, if someone's using their ABLE account to pay a housing-related QDE, and there was a list we provided earlier, so think anything from utilities to garbage or to your mortgage or rent payment or even property insurance taxes. I know I've heard of people using their ABLE accounts for that. Is if you're taking that money out of the ABLE account for that specific housing-related expense and you maintain it through the rest of the end of the month. So if it's, for example, in this case, Amy's taking it out in May, but she's not expending it until June for a housing-related QDE, it's going to be a countable resource. So that's just a very...
because she had that money on the 1st of the month.
Exactly. And so it's important to know you can have your ABLE account pay for those expenses so it doesn't happen. Here's another example I thought was good, and thank you for providing this one. It talks about if somebody takes a distribution, in this case, Sam, he took a distribution of $20,000 from his ABLE account to modify a van. He puts down a deposit, but however, part of that money he decides to go gambling. He may hit the Hard Rock Cafe, who knows, here in Florida. He played it big in the lottery and didn't win. So that $1,000, although it was identifiable, he spent it on something that wasn't a non-qualified disability expense, and so that would count as a resource in that month. Mm-hmm. And the last one here on this page that was good was the one about Jennifer. And this is if somebody takes money out of their ABLE account. They're going to use it. They have a specific purpose they want to use it for, which is a qualified disability expense. However, up leading to that date, they decided to change their mind or use it for a housing-related expense like an advance payment. So since in this case she took the money out in June, in August she decided to pay a housing-related expense with it, that $750 in this example would count as a resource in August. But the rest of it, as long as it's still identifiable for that college tuition expense, it would be excluded. Can you talk? We'll end on 36, and then we'll open this up for. I know we have lots of questions.
Yeah.
Can you talk to us a little bit on slide 36? It talks about using the funds from an ABLE account, and I guess it's the transfer of resources, basically, of what happens when you purchase items with an ABLE account, that there's still exclusions apply to the type of item purchased.
Could you repeat that one more time for me, John? I'm so sorry.
Yeah, items purchased with funds from an ABLE account, and that the typical SSI resource counting rules still apply. So, if I use the ABLE account and I purchase a second automobile,
right?
That's a qualified disability expense.
So we exclude the first vehicle, but that second vehicle, even though the monies were used to purchase it from the ABLE account, we cannot exclude that as because as part of the ABLE QDE, it's considered to be a resource. So we can exclude one, but we can't exclude the second one.
Exactly. And there's several other examples. Household goods and personal effects. I think there's a limit on, if you go and you decide to buy a bunch of gold or something of valuable, that would be, that would still count as. Mm-hmm,
right.
Exactly.
If the value of it exceeds that $2,000, it can be counted as a resource until you can show that you either sold it, and then of course provide those receipts to Social Security showing that you are now below that resource limit. I believe that Bureau contracts and spaces is excluded. I was actually looking for that POMS reference over here. So as long as your name is on that burial, and I just thought I had it, you can exclude that as well. Yeah, these are exclusions as well. So we can exclude one vehicle, household goods and personal effects up to $2,000, and items required for individuals' physical or mental impairment. So if you went and got modifications to a vehicle, specific for that vehicle, we can exclude that. Bureau contracts and spaces, of course, we can exclude that. And then property used for self-support. So if you have a property and you're living on that property, and let's just say you have a home and you have a ramp, it was an expense to purchase it, you could probably not sell it, but we can actually exclude that because it is self-support.
That's great, and that's good to know. So even when using an ABLE account, some of those other types of rules still apply. And I'll cap on this one, and then we'll open it for questions. Like I said, there's several questions we want to get to, and this has to do with ABLE monthly reporting, and that's important to know that a federal requirement that each ABLE program has to submit monthly to the Social Security Administration all account data and transaction history. So they're able to use that data and kind of look, okay, which individuals have SSI or receiving SSI. If they have an ABLE account, how was it used? So if there is, a withdrawal or distribution from the ABLE account, what was it used for? Or if it was, not in their connected bank account, and they can make up for it to make sure it was a qualified disability expense. It's good to know that Title II beneficiaries, so those are people on Social Security disability insurance based on their work history or a family's work history. It's survival benefits also. That's not reported to Social Security Administration because they're not looking at how much you have in assets. And then also individuals that are just self-reporting. They're not using that data as well. And so, Tina, with your permission, I would like to go ahead and kind of roll into, we have about 8 minutes or so left. I'll roll into some questions and answers that we have.
Yes,
and this
sir.
first one, I get this a lot, and so this would be beneficial for me as well. Let's say somebody has an ABLE account, but they work for a large grocery retailer in Florida known as Publix that has a 401k program or some kind of retirement program. How does Social Security look at that retirement account or a Publix retirement account? Does that count as a resource?
It is counted as a resource. Okay, because that one's a little tricky because depending upon when you can pull from that 401k, it can be counted as a resource. It's going to be listed in the resource when we go through the path of the SSI claim. We have it in there, and we actually put an amount of the balance of that 401k, and we ask the question: are you currently able to receive benefits from this 401k? And I believe it excludes it, but I have to get more clarification on that. So if you wouldn't mind, please send me that question so I can actually get with an SSI agent on that one. I took SSI claims in the past, and it's been a minute, but I do remember seeing that in that past, that we did look at that and whether or not we would actually exclude that. I know we have to look at that, definitely.
Yep. Yeah.
And
yeah,
Publix is a big one.
Yeah, and from my and what I've heard, we'll get definitely back to this individual, but that is if they have access to those funds, that's when it could count as a resource. So if
that is correct.
If whatever their requirements are, where they have to be a certain age before they can start getting money out of that account, then no. But that could be an issue later in life where they get to the age where they could take a withdrawal, that it could impact their federally means-tested benefit programs, whether that be SSI or Medicaid. And I think Medicaid's the bigger issue there. So you could use an ABLE account as a retirement account instead if you wanted to. Have a question here. This is more towards ABLE. It says someone received a large amount of money from a car accident. This is a personal injury. Could they put that into the ABLE account? Yes. But please remember that ABLE accounts are restricted to up to $15,000 per calendar year. So if it's an injury or some kind of reward that's larger than that, it could, you might have to look at talking to a special needs trust attorney, somebody in elder law that deals with special needs trust, to see how you could go about making sure that their government benefits are impacted. And also that could count as income as well. So it could impact somebody's benefits the month that reward was received. So hopefully that answers, I think that was Linda's question. There's one question here I don't know the answer for. It's a good question. It's could they use money from an ABLE account to repay Social Security? So I guess there was an overpayment or something where Social Security is requesting money back. I think that might be something related to somebody's sustainable SGA.
SGA.
Is that a situation where Social Security might require a payback, or do you know?
They would require a payback, but I don't know if we can use the funds from the ABLE account to do that. I've never heard of that. Oh,
yeah,
that's a good question.
I mean, that's a good question. I have to look back because, would that be considered a qualified disability expense? I know creditors, for example, cannot make claims on an ABLE account, and so I don't know in that situation if it would be considered a claim. So
that's a really good question.
Yeah. So we'll have to get back to you. I think that was Gary asked that question, so we'll get back to you, Gary. here's a more Social Security related question. It says, what if an individual is getting SSDI based on parents' work history? So it's an adult who's got some kind of parents' work that received it. What happens if both parents pass away? So does the survival, does that child, that adult child now, do they still get those SSDI benefits?
What we do is we want to pay off the higher record. So if we can, if the person is receiving benefits off of dad's record and then mom subsequently passes away, we still would like for you to file for those benefits on mom's record, and we would typically try to combine those records together, and if it can yield a higher amount, then we're going to pay off the higher record.
Okay, and then what happens if both parents pass away? Would they still get benefit?
Yeah, because you're receiving as a disabled adult child under that parent's record, so that doesn't stop. You still would
that's good to know.
So you would still have to meet the disability requirements, of course, and the review. So we typically do a review for a disabled individual at a 3-year review and or a 7-year review to see if you're still eligible to receive those benefits off that parent's record. Now, if you've gone back to work and your earnings are higher than your parent's record, then we need to file off of your record because your benefits are going to be higher.
Wonderful. All right. Going through here, like I said, I didn't mean to end the slide there. Let's look at some other questions here. It says, individual is their son. They're receiving, once again, SSDI based on parents' work history, but they're a child because the father is retired. What happens when that child turns 18? Will they still get SSDI, or do they need to go apply for SSI, or what happens in that case?
So if the child is deemed to be disabled, we need to have a medical determination prior to the age of 22. So yes. Yep. Now, let me go back. So let's just say the child is currently in school, receiving benefits off of dad's record. Dad is retired, and the child is in high school. That child is going to receive benefits until that child is 19 and 2 months. Now, along those lines, child is disabled. Child has no income other than the benefits off of dad's record. So yes, you definitely want to go in and file an application for SSDI off of dad's record as a disabled adult child, and also file for SSI. Because depending upon the amount that you're getting off of dad's record, it may be below that federal benefit rate of $783. So you want to try to combine as much income that you can receive from Social Security. So definitely file for both programs, but you want to do it before the child turns 18. When the child turns 18, because remember, when the child turns 18, we no longer look at the income in the household for the child. If the child is 17 and let's say 2 months, he's not technically 18, so we're then still looking at the parent's income, and he can't qualify for SSI. Did I lose anybody there?
So that's an important note to make. So if they're under the age of 18 and the father is retired, the mother, whoever was working is retired, and there's no nobody working in the house that they could, if they meet the disability requirements, get that, basically the SSDI based on parents' work history. But regardless, go in just in case they might be able to get some additional funds under SSI.
Yes, sir. Yes, sir. Yes, sir. Now, it could be the person's retired or a survivor. So a child could receive survivor's benefits off of a deceased wage earner, mom or dad. Child's under the age of 18, has been receiving it all their life, since they were babies or whatnot, and then they became disabled. Then because the only way you can be on a parent's record is if you are a disabled adult child. and that disability had to have occurred prior to the age of 22.
Wonderful. Well, I'm going to go, we're going to do I know we're out of time, but there are several questions. I'm going to kind of do as many as I can real quickly, but then also the biggest one being people are asking if this presentation is available afterwards on the website or email. And as long as I have your permission, Tina, I plan on sending out a PDF version of our presentations out to everybody who enrolled, if that's okay.
That is perfectly fine.
Wonderful.
And I'm so sorry I wasn't able to see it.
No, it's fine.
Does
clothing count as a qualified expense was one question. I said, it as long as it relates to that person, it helps improve their health, independence, or quality of life. So, for example, if they're purchasing clothing for maybe an upcoming job interview or to help them with their work, then yes, that's definitely shoes. You don't want to necessarily be running around barefooted out in Florida's crazy weather. So that would all qualify. Another question is, what is the next most important goal in achieving some changes in the current rules applicable to the ABLE Act? So for those of you who know, ABLE is recent legislation, and there's always a push to how can we better improve this and broaden who is accessible for ABLE, who could qualify. And one of those is the ABLE Act, the Age Adjustment Act. And what this would do was up the age from 26 to 46 on when that disability occurred. And this would, broaden to those who could apply, especially with disabilities that occur later in life, but also thinking of our military personnel here and abroad that might have some kind of veteran disability type that happened and occurred after age 26. So yes, I think that's important changes. And there's several others I think that are important to hopefully help. Looking through, maybe I can answer one more here, and then we'll get back to those who we were not able to answer on the fund. Are you able to use leftover SSI funds or SSDI funds to fund an ABLE account? That is, yes, you can do that. That's important to know. So I'm going to wrap it up there. I know there's several more that had questions, and like I said, we'll do our best to get to you in the next few business days, those questions to your answers. Want to thank Tina. Thank you so much for taking the time today to be on today's webinar. Thank you all who attended. Once again, visit ableunited.com to get all the information you need about ABLE accounts, socialsecurity.gov. If you search for ABLE accounts, you'll be able to find most of this presentation, but also some detailed information on how they work together. Thank you all so much for your time today, and hope you have a wonderful weekend. Take care, and thank you once again. Thanks, Tina.
Thank you.
Bye, everybody.